Brokers Alliance and the National Insurance Clearinghouse present the Business Insurance Zone, a Bravo video event. Broadcasting in HD 1080p on Vimeo, YouTube, the Insurance Newsnet, Agent Navigator, BrokersAlliance.com, and on Facebook, LinkedIn, Twitter, and the Insurance Forum. And now your host, the whiz of the biz, Steve Savant. Well, welcome everyone to the Business Insurance Zone, the talk show that spotlights insurance in your practice, keeps you up to speed on insurance news and products, features insurance strategies from top advisors. Get in the zone, the Business Insurance Zone. Our email is thebiz@brokersalliance.com, and you can call us at 1-800-290-7226, extension 147, for all your questions or quotes on life insurance, DI, LTC, annuities, or group pension plans. And of course, I just want to remind everybody that I'm not a tax or legal advisor. So if you hear any strategies on this show that you like and you want to move forward with them, always talk to your CPA or attorney first. And if you're with a broker dealer, always check in with your compliance department before moving forward with any of our strategies and tactics. Even though I think I'm totally street legal, I just want to make sure that you're all touching base. Today, we're talking about corporate DI insurance, disability. And with us today is Marcy Pruitt. Welcome to the show, Marcy.
Hello, thank you.
Marcy's the head of our disability department here at Brokers Alliance. And we had a show, we've done a complete show on individual. That was a great show because that really helped so many agents. It's not only education, but on our show, we make it entertaining. So we call it edutainment. It's a kind of a collage of the two words. Marcy, when we're talking about marketing to employers, right? I'm going in marketing employers. I want to know what was my front door issue. You know, in other words, I want to get in. I want to sell DI on a corporate level. I want to understand what it's like to carve out my execs. I want to know maybe, do they have a group plan? Am I going to need to punt because maybe people are not altogether healthy to go individual? Well, I need to get guaranteed issue or simplified issue. Talk a little bit about, give us a dip in the toe version of corporate DI.
Okay. Well, and I think depending what area of benefits or financial services you're in, you have a natural market. For example, if you are in the group health and ancillary lines and you've sold the group LTD, that is a natural opportunity market to go back in. There are always a top percent of the highly compensated that have reverse discrimination because the group LTD is a 60% to $6,000 taxable benefit, and the top people are making $200,000, $300,000. They're not at 60%; they're at 25%. Right there, you can go in, solve for the reverse discrimination, layer the individual on top of the group, and a number of things. You've taken care of the highly compensated employees. You have a product now that is not subject to a broker or record letter. You're fully vested in the product. So, by corralling that, top executive marketplace, you're really you're doing the right thing for your client, but you're also adding to your bottom line.
So if I'm hearing correctly, I don't want to extrapolate too far here, but in these scenarios, these group contracts kind of inadvertently cause a reverse discrimination on the highly compensated.
Right.
So they're down lower because of the numbers that they are, the caps. So the difference between the cap and what they might be able to get, what's the supplement? What can I come in on individual DI in the corporate setting for execs under that scenario? What's the number I can get them up to?
We can get you up to 75 or 80%.
Now, is that 75 or 80% of my income on top of what I'm earning, or total all in?
Well, total all in, but it's also covering your total income, whereas the group contract may only be covering your salary. So if there's quite often for highly compensated, there's some form of variable compensation, incentive, commission, bonus, which usually is not covered under your LTD contract.
Would your deferred comp be covered under that?
Absolutely.
How about stock options that you exercise?
Stock options, no.
Okay, no. Okay.
You're pushing it.
I was pushing it. The elasticity of income to me is all in. Okay, so but I'm looking at deferred. What if I have a Christmas bonus at the end of the year? My bonus by performance, right?
Right.
Okay, I think all those and anything else that I really need to know that I can include in my calculation.
You can. So, anything to include from an employee standpoint, your 401k, your contribution plus your employer match, your, again, salary, bonus, commission, all total compensation.
So if my group is picking up 25%, I can add on another what, 50 then? About
You
somewhere
can
there?
go up to 75% of your total compensation, or the cap of what the carrier is willing to sell. You know, so obviously someone making, again, $1 million would not be able to go to 75%.
Now, do most corporate employers then deduct that insurance on their rainmakers?
If they can. It can be done on a voluntary basis where the individuals elect to participate and it's payroll deduct, or the employer can pay for it, and it would be a taxable benefit if
To the employee.
to the employee, unless they grossed up their wages by the amount of the premium and or taxes.
And can they do that?
They can, absolutely.
So
Section
when-
162.
Okay, so are we allowed, when we do a quote, when we're calling you for a quote, I need to know that gross up amount as well as the actual percentage, the 75%, because that it's going to matter whether they deduct it or not, or they're taking it pre-tax or not, right?
Right.
So that's an issue. And do we have is there a basic form that when we're in big corporate that will help me get through that?
Well, it's really just, there's a little fact finder, you know, because we want to know what the underlying LTD is, who pays for that. Like in a law firm, for example, the partners, it's always tax-free because it's passed through. So they ultimately are paying for it. So you know, the LTD, the caps, the limits, the taxation, and then who's paying for the individual DI.
And you have a form that would help us.
Yes.
Okay, again, if you want this form that kind of lays this out in a nice, easy to understand way of applying, just write Marcy at her email address, marcy@brokersalliance.com, or if you want to talk to her, as I often do, you can call her at 1-800-290-7226, extension 126. Well, now that I have my form, I filled it out, we've kind of looked at the tale of two cities. Should I take it pre-tax or my employer tax? We've got all that taken care of. Now I have to go through the underwriting process, just like the individual DI, and if we were doing it outside, right?
You would, unless it's case by case. If there are 5 or more employees all purchasing the supplemental product, then that takes you into the guarantee issue world, where all of the underwriting is waived, pre-existing conditions can be waived, and the financials are waived.
As little as 5 employees can
Yes.
waive the financial requirement, the physical, the physiology issues, the exam, and pre-existing.
Correct.
So this would be huge for people who are really looking at this. If you could, but you've got to have 5 W-2 players for this.
Yeah, and they don't really have to be W-2.
Really?
Even 10, you know, and this is all a case by case. And because more goes into play, we look at, are you W-2, are you 1099, are you captive, are you an owner, you know, the taxation, the ages, the male-female mix, the occupation, the industry. So it's all that data is massaged, and then the carrier will say, will pass, or they'll make an offer. The more lives, the higher the amount of guarantee issue.
And in your experience, is the guaranteed issue more, multiple life? Is that a hot market to be into?
Absolutely, because the entire underwriting process is out the door. Deep discounts are applied, unisex ratings.
Okay, so you have unisex ratings, and you're going to get a list billing discount.
Correct.
Right? So you're getting a billing discount. You're getting waived finance and physical underwriting requirements. I just want to make sure I get all of it, and the physical. All right, and so I'm looking at I got to have my minimum of 5, but if I get into bigger groups of execs, then the billing and all these areas are going to get steeper discounts because I'm conglomerating. I'm kind of consolidating.
Right.
Okay. And when you see DI today, when they do list billing like that, can it be paid by the month?
Absolutely. The list bill is typically paid monthly. You can do monthly, quarterly, semi-annual, annual, but it's typically list billed monthly.
So, in your experience, are these execs generally getting the company to pay for it so that it's deductible to the corp, and so if they did receive a claim, they'd have to pay taxes on it?
Well, we really suggest that they gross it up if the company's paying for it so that it can be tax-free, because especially in this scenario, their group is already taxable. The whole point of building on top of this is to get a higher income percentage replacement. The smaller groups tend to be corporate pay. Well, in years ago, that wasn't the same scenario, but for the last couple years, with just downsizing and unemployment. We unfortunately have not seen as many corporations paying for an executive benefit. Although corporations today, I mean, they're flush with money, and it's starting to loosen up. We're seeing a lot more opportunity out there for that. The larger the case, it tends to be voluntary.
In corporate DI, and I'm thinking of the bigger C Corps, where I know we can get the deduction. When you walk into a fairly large C Corp, you're going to be able to leverage the listing, the bill listing discounts, the waiving of requirements. Nothing's going to get excluded. Right. When I get up to that level of disability, is it your experience that they already have other perks, and this is now a brand new one, or no, it exists already?
Now it's kind of a legally discriminatory one that can exist because there's so many other products that have the discrimination testing, and it's a lot of executive perks have been done away with. So this is something that they're unaware of.
So if I wanted to get into a corporation and say, I have something that I don't have, this is not ERISA then, right?
There's not a letter ruling on that, but some carriers that have a group platform tend to lean towards the ERISA side, but you do not have to file the 5500s on this.
Of course, remember, we're not tax or legal advisors on our show, and always check in with your CPA and attorney and your broker-dealer compliance officer just to make sure anything that comes out of my mouth, for sure you want to check, and and Marcy as well. Because the reason I'm bringing this sounds like a good marketing opportunity to go in and bring a benefit that probably is not on the books, to really show this, we're able to pick up a difference in bring another benefit, and also I would say get the deduction and not worry about health exclusions or any of that.
Exactly.
I love all that. Well, listen, coming up in our next segment, we're going to continue our segment on corporate DI. We're going to drill down even more, talk a little bit more of the issues, the deductions, everything else. You remember, you can write Marcy at brokersalliance.com. Call her 1-800-290-7226, her extension 126, or hop out on our website, www.brokersalliance.com. You're listening to the Business Insurance Zone, the talk show that features insurance in your practice. We'll be right back after the break. Steve Savant here. For years, I've heard that less than 2% of all term life insurance ends in a claim. That's not many, and clients had to die to receive the benefits. That's the old term insurance. Now start selling the new term insurance. The term insurance that covers your client through a chronic illness, a catastrophic event, or a terminal diagnosis, and pays their monthly premium during extended periods